So AJ, seeing as we just looked at the VIX kind of down there at that low, and in theory, if it starts to creep back up, that's good for us premium sellers, right? Because those insurance contracts that we're selling to the market increase in value, and so like our dividends are a little bit higher. And is that a
Hmm.
good way to look at, you know, the next couple of moves? So,
Yeah.
let's go ahead and pull up the question for the topic, and that is why selling options is the right thing to do in a sideways choppy market. Where do you want to begin
Yeah.
with that?
Well, I first so sideways chop always freaks out, traditional investors, right? Because number one, identifying these tops and bottoms, if you're trying to, if really nailing those tops and bottoms is, your way of making money, and usually trend following traders that's how they make money, right? They identify a bottom and then they identify when it's going to be a top, and that's your entry and your exit signal on a directional position. And if you've got a directional position, you can use a leveraged option. You can buy an option that's a leverage and really capitalize. And you can do that in the down or the up direction. But sideways choppy means that you're going to have to be uh, trading more often. You're not going to make as many gains. And you're probably, if you're a directional trader, you're going to get sloppy because identifying these tops and bottoms isn't the easiest thing to do. And so if you're actually buying into that with, whether you're buying stocks, shorting stocks, buying underlying symbols, or if you're buying leveraged puts and calls, it starts to get more frequent, and it also gets more sloppy. Um, but I put it out there because a lot of folks are saying, hey, the market is no more just a sure thing. I can't just put my money in Nvidia and have it make money for me. So I'm going to take my money out and just sit on it. And I actually want to give you an alternative, right? What is, you know, if we can't count on the direction of the underlying symbol, right? If we can't count on it either going up or down such that we can make money, like we have been on Apple, we have been on Microsoft, we have been on Nvidia, to a lesser degree, we have been on like a Google or an Amazon. If we can't count on that, like people have been for the whole, 2024 to date, what can we do? What can we count on? Well, you already know that the Fed's going to lower interest rates, so you can't count on just putting your money in the bank. You're going to get lower rates than you expect. What we can count on is that time is going to continue to pass by, right? We know that a second, there's going to be 60 seconds in a minute, there's going to be 60 minutes in an hour, 24 hours in a day, 7 days in a week, 52 weeks in a year. That's not going anywhere. And options have because they have an expiration date, they have a known way that their value, bleeds off over time. I challenge anybody to like go and grab a Google window, which I'm going to do for you. I'm going to go ahead and demonstrate that right here. Let me go ahead and pull this up, and I'm going to open up a new tab. And in the Google search engine that shows up, I'm going to type in option theta decay. It's the first one that came up because I've been typing it in a lot. I want to show people why they shouldn't just take their money out of the market right now, but they should just do things a little differently. If you take a look at this image right here, and I'm going to open up the website that contains it, and I'm going to go ahead and just open up the image itself in its own browser window. So if you take a look at this curve, this is the way that an option's value decays with time. And it's actually this is a visualization of human nature, right? This is how we procrastinate, right? If you think of somebody who's got a young person who's got a science report due, they'll do a little report, a little bit of effort on month 1, maybe a little bit more effort on month 2, more, and then, you know, 2 weeks before the science report, they're spending all their time in the library every day, pulling all-nighters and things as it gets closer and closer. Well, that's the same thing with options. We don't really worry about its value decaying until, the last 30 days. So you're probably asking, "Why am I showing you this?" Well, if this is how an option's value decays, why don't we make sure we're on the right side of that equation? Why aren't we just selling options, letting time pass by, and having the value go to zero so that we don't have to worry about buying it back, right? And we don't want to do it for too long because, if you sell something 60 days out, you don't get, it's the juice ain't worth the squeeze. You only get a little bit incrementally more money if you go twice the amount of time out. It's better to like do a 30-day option, let it go to zero, and then do another 30-day option and let it go to zero rather than going 60 days on the same option, if that makes sense. But then the the kicker is when we do go sideways choppy like this and the VIX starts to go higher, guess what happens to this curve? Well, I'll tell you what doesn't happen. What doesn't happen is there isn't any value at day 0, right? Because at day 0, an option is worthless. That's like the definition of an option is that at day 0, all of its extrinsic value is worth nothing. And so that stays the same, but its value as we get farther away from the expiration date goes higher. So not only do we have a strategy now, if we get into the business of selling options, not only do we have a strategy that works when directional is not going to be a given, we now can, go on time being the given, we'll sell options, but it just so happens that when direction is no longer a given, options are worth more. So it's even more of an incentive for us to be on the selling side of options and take advantage of this time or theta decay because we're getting more now than we did even a month ago for the same options for the same amount of time. So I put it out there that now is the best time, not the worst time to be in the markets. Now is the best time. And I say that because if you are up on how to sell options, specifically near term at the money options, you're going to get more money than we've been getting all year for the same option trades. So I'm just saying now is the time to pivot, and the strategy of choice should be selling near term at the money options.